Welcome, everyone, to the Spend Life Well show, where we apply biblical wisdom to your financial journey. I'm Certified Kingdom Advisor Mark Trice. I am here in the podcast studio with fellow financial professional Jesse Hamilton. Jesse.
Hey, everybody. Welcome to the show.
So we're going to be a little bit different program today. It's a very exciting topic and
But relevant.
But very relevant. Not lots of folks love to talk about taxes right now, right? Because we're getting in that mode. We're trying to prepare our taxes for 2024. But there's some important deadlines and chances for you to take advantage of those deadlines to be able to maximize your retirement contributions and potentially actually get a little bit of a deduction.
That's right. So maybe you're a do-it-yourselfer and you're doing it online or directly submitting to the IRS. Maybe you have a great CPA that you have a relationship with. Either way, Mark and I are not CPAs, but we're here to just talk about different deadlines and maybe give some suggestions on how you could save some money in the long run.
And I have to get a disclosure. This is not professional advice. Please consult a tax professional for official advice. We are just really smart financial advisors.
Most of the time, yeah.
All right. So when's tax deadline, Jesse, this year? April 15th, is that right?
April 15th.
I know
it's a Tuesday.
Every once in a while, they move the dates around and stuff from April 15th because there's a holiday in Washington, D.C. or something like that. But this year, it's Tuesday, April 15th.
You celebrate privately, or
I don't even know what the holiday is. I used to live up there, but I can't remember which one it was. But that's an important date. That deadline represents or presents an excellent opportunity to assess different financial strategies and prepare and maybe take action that will affect 2024.
That's right.
Taxes.
It's kind of like the full retirement age at Social Security. Good things happen before, bad things happen after, but it's flipped. But.
So Tuesday, April 15th is an important deadline. If you forgot to make contributions to your traditional IRA or Roth IRA last year.
So you can choose which year it goes into.
Right. So let's talk about IRAs for a moment, Jesse.
Yeah, so the IRA maximum for an individual under 50 is $6,500 in 2024. If you're over 50, you can catch up with an extra $1,000, $7,500 total. So you have some extra cash laying around, and you could do some catching up if you're in that age range.
Well, if you still need a tax deduction, your income is below a certain level, that will have that contribution on a traditional IRA will count towards reduce your taxable income.
Mm-hmm.
Roth IRA contributions do not, but there are different limits and criteria. Give us a call and we can tell you based on your age what your limit would be and your income. We can kind of give you some guidance with that.
Yep. And of course, 401ks are different. They are tied to the calendar year. So if you didn't make a contribution yet, you're out of luck. You'll just have to do it for 2025.
Yeah, make sure you're taking advantage of that. A lot of people make the mistake, and maybe their employer offers a match, Jesse, but they make this mistake to only contribute up to what they're getting matched.
Right. The actual limit is much higher.
Right. And this year, if you're over the age of 50, you can contribute $30,000.
$30,000, yeah. I think $30,500.
$30,500, you are correct. And if you're between the ages of 60 and 63, there are catch-up rules that you can do this year. So that might amount to another $1,000 or so. I have to look at the numbers while we're talking here.
I think it's a little bit more than that.
Yeah. So those are for people that have 401, 403B, 457, or even simple IRA programs through their employer.
Good to know.
So the rules are a little bit different on that. It's the greater of $5,000 or 150% of the normal age 50 catch-up contribution. So you could be doing more, maybe less as well. So remember that. That's free. That's money that you can set aside for the future. And let's talk just for a second about traditional versus Roth.
Yeah, so just as a refresher, traditional IRAs are tax deductible given that you meet the criteria. You have to be under a certain income level, but you reduce that from your income when you pay your taxes. So it's like you didn't earn that money.
Right. And if it's a workplace, traditional 401k or 403b or all the 4Os, You'll deduct your take home pay a little bit, but it'll also reduce the taxable income you're receiving from your job.
Right. Versus Roths, you go ahead and pay the tax now. It has a lot of long-term benefits. It's tax-free as it grows and grows and grows forever. That offers a huge benefit to people in the long run, but in the short term, it actually is more expensive to contribute to a Roth.
In the short run, because you're making that with after tax dollars,
Right.
right? But that Roth contribution, whether it's a 401k or a Roth IRA outside the workplace, that results in tax-free growth, right? Over
Yes.
time,
Yes.
and tax-free withdrawals in retirement, provided that you hold that account for at least 5 years and that you're over the age of 59 and a half.
Yeah.
How many of us think that taxes are going to go down in the future?
Unlikely.
Not many people are going to raise their hand or shake their heads if they're listening to this podcast in their car. So if you think your taxes will be higher in the future, which a lot of people in retirement they are, you'll want to consider that as a possibility.
And of course, we can't forget health savings account.
Yeah.
If you have one, you have a high deductible health plan. That's a triple tax advantage. That's better than a Roth, if you will. Contributions are tax deductible. Growth is tax free, and withdrawals are also tax free if they're used for medical expenses.
Okay. So that's good too. So it's like a triple whammy, right?
If you use it correctly, yes.
Do you remember what the limit is for 2025 on HSA contributions?
Not off the top of my head.
I know it's over $6,000. I apologize for not having that. Give us a call. We can give you those limits and stuff.
Mm-hmm.
But the key there, Jesse, as you mentioned, I just want to make sure we reiterate that, is that you have to be a participant in a high deductible health plan at your work. Okay,
Right.
That's very critical. If you do that, not only will it potentially save you monthly premiums that you have to pay, but also you can't do the health savings account unless you're in a high deductible health plan. Okay.
Yeah, they go together.
Yeah, this is a great benefit. You can save that money tax-free, let it grow tax-free, and as long as you're using it for medical expenses, and even when you get to age 65, you can use it for Medicare premiums. All the withdrawals are tax-free.
Yeah.
So
a couple quick strategies here, just as we approach that April 15th deadline. The first one is just a budget review. So analyze your monthly expenses compared to your income and maybe reallocate different amounts that can go towards retirement contributions.
Because a lot of people, they're sitting there saying, there's no way that I can contribute $1 to my retirement plan. And maybe there is. We just need to look at the budget and the spending plan to see where are some areas that we can cut or reduce that will help us achieve that goal of saving. It's very important that you, our belief here from a biblical worldview is to give first. Some people call that a tithe, but give first, save for the future, and then prioritize things that we need in our budget. But a lot of people do it the opposite, where it's spend what I need, borrow if I have to, and then if there's anything left over, I might save a little bit or give some of that away. And that's not the right approach that the Bible talks about. Very much so, you need to give back, save, and then you're spending.
Mm-hmm. So this is a good time to revisit that. If you've got a stack of papers on your kitchen counter waiting for tax day, just take it one step further and analyze the budget. Or maybe you use your computer, you have a nice cloud folder, and you can pull out the Excel spreadsheet. But this is an opportunity to change.
You need to save some every paycheck.
Mm-hmm.
Every paycheck. What's another way, Jesse? Because I think people like, I got to manually do something. To do this.
A very powerful tool is setting up automatic contributions before tax time. And that's just a monthly amount that goes into the IRA, whether it's your 401k at work or a personal IRA. Just getting in that habit of a few dollars, I'm talking $25, $50, $100 a month, putting away towards retirement. And it can make a huge multi-thousand, maybe even $1 million impact later on in your life.
Yeah, and those are things that can really make a difference and help you prepare for retirement. What about, a lot of people get bonuses early in the year for the previous year. What should they do with those things?
Yeah, so same strategy here. Figure out if you can put that in a retirement account, reduce your income, stash it away for the future, all before the tax deadline.
Yeah, good example there of how to maximize those things. So let's as we wrap up here, it's important that you max out every contribution that you can do before the April 15th deadline. That allows you to take full advantage if you're eligible for the tax saving opportunities and continue to strengthen your retirement. If you're a participant in the 401k, you may be able to contribute to an outside IRA. Talk to your tax professional to do that. You can give us a call and we can try to help guide you in some of those things.
Yeah, this process is a lot like other things in life, just like your health, your spiritual discipline. A little change every day can make a really big impact later on in your life.
And take a moment to like us on this YouTube or Facebook, wherever you're watching this.
Yeah, podcast listeners on
Podcast
Spotify,
listeners.
Apple, wherever you listen.
Like it, and then follow us too, because we have a lot more episodes available in our playlist on taxes and really retirement planning in general.
Yes, we do.
So from the ClearVesta Financial team, we're here to help optimize those retirement contributions and strategies that will help you meet your goals. You can text us anytime, 254-282-0495. That's 254-282-0495. Or even email us, Jesse. What's that email we use?
Yeah, info@clearvistafinancial.com. Send us a quick question. We'd love to talk.
Sure, we'd love to make it into a podcast sometime.
Yeah.
So until next time, folks, you've been listening to the Spend Life Well show.
Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and ClearVista Financial are not affiliated. Discussions in the show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.